Hey option traders, for today's trade we are looking at an option play in ticker symbol SQM. This was yesterday's IBD stock of the day after bouncing nicely off of its 50-day moving average. So looking at SQM on MarketSmith, we can see that the stock has had a pullback over the past few weeks. This is the stock's first test of the moving average since the breakout. We're seeing a pullback occur in lighter and lighter volume, which is definitely a good sign. So shares broke out from the 90.97 buy point on May 18th. A strong earnings report then boosted the stock in heavy volume right up to the profit zone. With shares pulling back to the 50-day line now, it's reasonable to hypothesize that the stock could bounce higher from here. The stock is also well supported by a 99 composite rating and a 99 RS rating. Also, its EPS for 2022 is expected to rise 361% to $9.45 a share. SQM is a major fertilizer company, a lithium supplier as well. Alongside peers like Albemarle and Livent, they've all been benefiting from the huge increases in lithium prices recently. Meanwhile, demand for the lithium-ion batteries that power electric vehicles is also up. But there is some skepticism over if lithium prices will continue to hold. Goldman Sachs recently predicted that prices could crash by 70% over the next year as a lithium surplus emerges. But the good news is that SQM isn't just a lithium play, it's also the largest producer of potassium nitrate used for fertilizer and a leading producer of iodine. With all that said, we are looking at a slightly bullish trade strategy called a cash secured put. So a cash secured put is sort of similar to a covered call strategy, which we've covered several times in recent weeks. It only involves trading one option contract, so you won't be creating a multi-leg spread or anything like that. We're keeping it very simple with just one contract, and in this case, that's a put. So remember, with options, there are two types. There are calls and puts. With both calls and puts, you can either be the buyer or the seller. Just like with any stock, you can either buy long or sell short. So to set up a cash secured put, you'd simply need to sell a single put option in the stock while simultaneously setting aside enough cash in your account to cover 100 shares of the stock. You may or may not have to buy those shares, but you do need to set aside the funds just in case. As the seller of the put option in the stock, you are now obligated to buy 100 shares of the stock from the put buyer at the agreed upon strike price if shares trade above this price at expiration. In exchange for this, the buyer of the contract pays you a premium. The goal is to either have the put expire worthless and above the strike price, allowing us to keep the premium, or be assigned and acquire the stock below the current price. So the main risk with the trade is similar to just outright stock ownership. That is, if the stock falls quickly, the trade will suffer a loss. However, the loss will be partially offset by the premium received for selling the put. If the put does get assigned, the investor takes ownership with a reduced cost basis and can potentially begin selling covered calls to generate further income from the position. If you're considering putting on a cash secured put in a given stock, you should first ask yourself, do I believe this stock will trade in a neutral to bullish direction? And am I willing to own this stock if the option gets exercised? If the answer is yes to both of those, then it may be okay for you to proceed in this trade. Put selling is not simply a buy and hold strategy. It involves thinking ahead about appropriate action in possible future scenarios. For example, if the stock price does decline, where would you sell it and take a loss? The put seller bears the risk of any price declines in the underlying stock. Depending on the option, you could have a number of different expiration dates and strike prices to choose from. This, incidentally, is one of the strengths of options. Options provide us with choices, and investors can analyze a variety of criteria to determine which of those best fit their portfolio needs. Investors must understand that time is a double-edged sword, especially when it comes to the buyer. Options contracts decrease in value at an accelerating rate as they get closer to their expiration date. So now that you have a better idea of the mechanics of the cash secured put, Let's take a look at my trading platform and set up a real-life trade using SQM. So here we are on my thinkorswim dashboard, and SQM is our ticker symbol for today. You're going to want to select single here in this box. And make sure that you are on the August 19th expiration date. For our strike price, we're going to select 90 here, and we're going to be looking at puts. All right, so to recap, we're selling one SQM put with a 90 strike and an August 19th expiration. So investors could look to sell an August 19th put with a strike price of 90 for around $6.60 or $660 in total premium per contract. An investor selling this put would receive $660 into their account, which would be theirs to keep. If SQM falls below 90 by August 19th, they would be required to buy 100 shares at 90. The effective net cost of the position would be $83.40 a share, thanks to the option premium received. If the stock stays above 90 at expiration date, then the put expires worthless, leaving the trader with a healthy 7.9% return on capital at risk. The maximum loss on the trade would occur if SQM fell to $0 a share, which would see the trade lose a substantial amount, but most traders would cut their losses long before then. Cash secured puts are a great strategy to start with beginners, but losses could be substantial if you don't manage the position. So it's still best to practice in a virtual account before risking any real capital. Only try the trade with real money if you have a good handle on the risks of this strategy. Always remember that options are complex and investors can lose 100% or more of their investment. Be sure to check out investors.com/options for more option trading tips.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.